Hey everybody, welcome to another video. Today we're going to be taking a look at EVgo stock, specifically whether or not you should be owning this company at this point in the middle of 2023. Now, if you take a look at the stock chart here over the past year, obviously you can see it hasn't been that great. Right now the company is valued at just under $1.2 billion, which is the lowest it's been in a while. So is this a good time to be buying EVgo stock, or is this something you want to stay away from? Taking a look at EVgo's balance sheet from their first quarter report this year, we can see they've got $163 million of cash, which is substantially lower from where it was at the end of 2022. So in just the span of one quarter, 3 months, EVgo has gone through about $80 million of cash. Here on the next line, you can see EVgo has added about $18 million to their accounts receivable. So this is money that's owed to EVgo for products or services that they've already provided, and they're just waiting on that revenue to come in from those customers. Next up, we see accounts receivable related to capital build, and that's gone up by about $1.4 million. As far as I can tell, this is related to the partnerships EVgo has with companies like General Motors and Nissan, where EVgo is supposed to be providing charging equipment to those companies, and eventually those companies will be paying EVgo for that hardware. Next, there's prepaid expenses, which declined about $1 million, and then there's other current assets, which doubled, going from $5.2 million up to $10.5 million there during the first quarter. All of these current assets combined gives EVgo $216.7 million of total current assets. Below that is property, equipment, and software, which increased about $60 million during the first quarter here. And most of that was the equipment. It's the charging station hardware itself. EVgo owns all of their chargers, or at least most of them. And most of them are DC fast chargers, which are very expensive to build out. So this is a very capital-intensive business here. Below that is operating lease right-of-use assets, which came in at $54.6 million, a bit higher than where it was the previous quarter. And these are essentially the leases that EVgo has for their charging stations. Essentially, in a parking lot, they're leasing out that land that their chargers are sitting on. And this is where it's reported here on the balance sheet. Restricted cash and other assets didn't change too much over this quarter, but their intangible assets did decline about $3 million. And then goodwill also, that didn't change very much. This is typically related to any acquisitions the company has made, and they haven't really made any new acquisitions during the first quarter, so that's pretty much stayed flat. Now, all of these assets added together gives EVgo total assets of $730 million, which is almost flat from where it was at the end of the fourth quarter. Moving on to their liabilities, there's accounts payable of $18.6 million, which is up pretty substantially from the previous quarter. And then there's accrued liabilities. That's at $40.1 million. Not too much has changed there. Operating lease liabilities current, you also kind of want to pair this up with the non-current operating lease liabilities. These pair up to the operating lease right-of-use assets. So these, the $54.6 million there pretty much will balance with both the current and the non-current operating lease liabilities when these two are added together. So, for current short-term, we've got $5.6 million of those, and then the non-current ones are at $48.2 million. So most of these are longer-term leases that EVgo has. Next is current deferred revenue, which is at $24.5 million, up a pretty good amount from that previous quarter. And then customer deposits has declined about $5 million, with other current liabilities sitting at $400,000 right now. All of these current liabilities added together brings EVgo's total current assets up to $102.1 million, up about $15 million from the previous quarter. As for non-current liabilities, we already talked about the first line there just a minute ago. Earnout liability at fair value is at $3.8 million. Asset retirement obligations are at $17.4 million. Capital build liabilities are at $28.2 million. Deferred revenue for non-current is $37.2 million, which is up a pretty good amount there, quarter over quarter. And warrant liabilities at fair value, those are at $18.7 million. All of these liabilities combined puts EVgo's total liabilities at $255.5 million, which is up about $43 million from the previous quarter. Looking at their cash flow statement, we can see exactly where EVgo has been spending their cash. You can see $19.3 million there has gone towards their operating activities. $65.2 million has gone towards the purchases of property, equipment, and software. Again, we went over that on the balance sheet. That's pretty much building out new chargers for their charging network. And then for financing activities, EVgo has provided $1.9 million, most of that coming from their capital build funding. So altogether, EVgo spent about $83 million of cash in the first quarter alone, and as you can see right there, they've only got $164 million remaining on their balance sheet. In order to continue growing their business at this pace, EVgo is going to need to raise more funds from either taking on new debt or issuing new shares. They announced a share offering not too long ago where they would be able to raise up to $125 million of cash, which, if they go up to that full $125 million, then that would dilute the stock pretty significantly because it's only $1.17 billion right now. Looking at their income statement, you can see their revenue has grown pretty substantially over the past year, but their cost of revenue and depreciation has grown right alongside that, so EVgo is still pretty much breaking even just as far as the gross profit is concerned. Beyond that, there's also the general and administrative expenses, which reached almost $38 million in the first quarter. It didn't grow that much over the fourth quarter, but still, I wouldn't expect this number to be decreasing very much anytime soon. So with what we can see here on the income statement, it's clear that EVgo won't be profitable anytime soon, so they definitely are going to have to raise funds, most likely through share dilution. Now, I'd also like to point out that there is a lot of non-controlling interest here with EVgo. Their net loss was $49 million, but $36 million was attributable to non-controlling interests. That's about 74% of that total net loss. Only $13 million was attributable to the Class A common stockholders. Now, in the future, if this was net income, let's say, for example, it was $100 million, and the amount of non-controlling interest here stayed at the same percentage, 74% like it is right here, then out of that $100 million, $74 million would be going towards non-controlling interest, and only $26 million would go towards the actual Class A common stockholders of EVgo. So chances are these non-controlling interests will have a pretty negative impact on net income per share down the road once this company becomes profitable. Another thing I'd like to bring up is Tesla's North American charging standard. EVgo has announced that they'll continue expanding their support for Tesla's connector at their charging stations, but I think this could be a problem ultimately for EVgo, as there's going to be less differentiation between EVgo's chargers and Tesla's Superchargers. I think one of the biggest reasons people use EVgo or Electrify America or any of these other charging stations is because they can't use any of the Tesla charging stations. But of course, that's going to be changing here within the next couple of years, and it's going to be changing pretty quickly. Pretty soon, it's not going to matter whether you're driving a Tesla, a Ford, or a Volvo. You're going to be able to charge at pretty much any charging station you want to, as long as it has that North American charging standard connector. So on one hand, EVgo will be able to benefit from more Tesla owners being able to charge their vehicles more easily at EVgo's stations. But on the other hand, all of those Ford, GM, Rivian, Volvo owners, they're going to be able to charge at Tesla's chargers now. So essentially, Tesla is now competing even more directly with companies like EVgo, now that their North American charging standard connector is actually becoming a real standard used by multiple automakers. If you want to know the real reason Tesla is opening up their supercharging network and charging connector design, check out my video on that, and I'll see all of you in the next video.